In the bond market moment, Fed Chair Jay Powell spoke at a banking conference on Tuesday, even though it's supposed to be a quiet period ahead of the Fed decision next week. Todd Colvin of MarkIV Brokerage has more on the bond market moves.
10-year notes open moving lower. Remember that first half of July, we saw yields go from like 420 to almost 450 and then do an about face and reverse lower over the last 4 sessions. And now we're back to very close to the midpoint of the month, just above it actually at 437. Midpoint is around 433, 434. So what now for 10-year? We've actually had a very bearish run to start the month. Now things have backed off. I wouldn't necessarily call it bullish yet, but if we see a move back below that midpoint and settle, it kind of takes away a lot of the momentum we saw at the first half of the month. So 433, 433, we see a settle below those levels. It kind of takes away from the earlier selling we saw earlier in the month. However, with auctions still coming up, we have a 20-year and a 10-year tips later this week. That could be enough to nudge those yields higher. I'm still looking at that 4.5% yield, which we missed on July 16th as a key level. So looking at 433 and 450 as we move, as we make headway. Other thing to note is that the Fed is in a blackout period ahead of July FOMC. Now, I don't recall this ever happening again, and I know there are special circumstances, but keep an ear out. I doubt either one will be talking much about rates, but it's odd that we're hearing from Fed speakers in the blackout period.